We all want to invest internationally through US ETFs directly. But did you know that there are more than 4,300 listed US ETFs? That can be very confusing to choose from. The truth is, for us as Indian investors, only a handful actually makes sense. So, which US ETF should you consider, and what is the right selection criteria? Because the wrong choice could quietly cost you lakhs over time. I know you want exposure in the global stock markets for better returns and more diversification. But if you're also feeling confused with so many ETF options, then don't worry. As always, I've got you. Before that, a little introduction about myself. I'm CA Vamika from the Wealth Palette, where we invest with clarity and confidence. In the previous video, we discussed Indian ETFs and mutual funds to invest internationally. Do check it out after this video if you haven't already. In this video, we'll discuss first, types of ETFs and why ETFs make sense for international investing. Second, we'll see the biggest asset management companies offering ETF investing in US. Lastly, top 5 US ETFs based on our evaluation criteria. Okay, let's look at the 3 different types of ETFs in US. The most common and safest type of ETFs are physical or replication ETFs. These ETFs are what we see in India also. These ETFs simply buy stocks that make up an index in the same proportion as the index. Basically, they replicate the index exactly. Hence, they are also called as passive ETFs. Second ETF type are active ETFs in US. In this, portfolio managers select stocks actively and aim to outperform their benchmark. They are like active mutual funds but in ETF form. By default, active ETFs have higher expense ratio than passive ETFs because of an active fund manager trying to beat the index returns. But there are famous fund managers such as Terry Smith who are against ETFs because of the rise of this third type of ETFs called synthetic ETFs. They use complex instruments such as swaps or derivatives to replicate the index. Synthetic ETFs do not hold the actual assets, but instead the synthetic ETF signs an agreement with a bank or a financial company called a counterparty. That bank promises to pay the ETF exactly what the target index earns by investing in other instruments at the back end. In return, the ETF gives the bank some collateral or fees. The biggest risk in synthetic ETFs is that you are depending on another company to fulfill their promise. If the other company called counterparty defaults or does not fulfill the obligation, it would mean the investor losing its investment. That is why synthetic ETFs are quite complex and less transparent. These type of ETFs are more common in Europe stock markets. Biggest provider of synthetic ETFs are Amundi and Deutsche Bank's X-Trackers. So first very important thing for us to know is that we need to always choose replication or passive ETFs because we want to minimize our instrument risk. But why are we considering investing in global stock markets through ETFs? Let's look at how ETFs make it simple for passive investors like us to get global stock market exposure. First reason is we want exposure in the global markets, but we don't know which stocks to invest in these foreign markets. Hence, ETFs are a great way to invest in the global markets because they are a basket of stocks which track the top global indices. Example, Nasdaq 100 is the US index which tracks top 100 non-financial companies. A Nasdaq 100 ETF would exactly mirror this index by buying the stocks in the exact weight like the index. Second reason to consider ETFs is of course low cost of these instruments. We'll see ahead in the video that most passive ETFs have expense ratios of as low as 0.03%, which is negligible cost of investing. Third reason to consider investing in ETFs is liquidity and transparency. We'll see in the video ahead that the top ETFs have traded volumes of 3 million plus per day. Also, there is complete transparency of what does the ETF actually hold. Before we discuss the best global ETFs to invest in, we need to know the names of the biggest asset management companies in the world which offer these ETFs. BlackRock का नाम तो हम सबने सुना है. It's the largest asset management company in the world. It's also the largest global ETF provider and operates its ETFs under the name iShares. Second largest fund in the world is Vanguard, which is known for low-cost index ETFs and mutual funds. Third is State Street, which is one of the largest custodians and fund manager. Invesco, Charles Schwab, and JP Morgan Chase are among other asset management companies that offer US and global ETFs. All these 6 companies are stable, reputable institutions of the US financial system and collectively are managing trillions in assets. ये तो हो गई companies that offer ETFs. But which ETFs should you consider for investing in the US? We look at ETFs which are passive replication based ETFs as discussed in the beginning and from the top asset management companies that we discussed just now. Let's look at the evaluation criteria for selecting the top ETFs that you can consider for investing in the US. First is the underlying index the ETF is tracking. Since it is a foreign index, we will go with the broad market cap based indices such as S&P 500 and Nasdaq 100. Second is the AUM, that is the asset value that the fund manages should be sizable. Third is trading volume of these ETFs, which should be high. That means that there should be enough buyers when you decide to sell. Fourth, we look at expense ratios, which should be low. Fifth, we look at impact cost, which should also be low. Impact cost is the difference between the market price and the actual value of the assets called INAV. We don't want to pay a premium for the underlying assets. Hence, the impact cost should be as low as possible. Let's discuss the top 5 ETFs investing in S&P 500 and Nasdaq 100 indices. First is Vanguard S&P 500 ETF, which has the highest AUM of $740 billion. Its traded volume is also sizable at 6 million ETF units per day. Expense ratio of 0.03% is also super low. Even the impact cost is 0.01%, which is negligible. Its ETF symbol is VOO. Second ETF is BlackRock's iShares Core S&P 500 ETF. Its symbol is IVV. This ETF also has a very high AUM of $665 billion and the high trading volume of almost 4 million per day. The expense ratio of this ETF is similar to Vanguard's VOO at 0.03%. And the impact cost is also low at 0.02%. But if you see State Street's SPY ETF has the highest average daily trading volume of 57 million units. In fact, it is the world's highest traded ETF. However, its expense ratio is a little higher at 0.09%. Hence, Vanguard's VOO and BlackRock's IVV seem to be good options for S&P 500 ETF investing based on our evaluation criteria. Next, let's look at investing options for Nasdaq 100 index. There are 2 very popular ETFs by Invesco. The older one out of these 2 is Invesco QQQ Trust Series 1, which was started in 1999. Its symbol is QQQ. The second one, Invesco Nasdaq 100 ETF, was started very recently in 2020. Its symbol is QQQM. Since QQQM was recently started, its AUM and average trading volume both are lower than QQQ. However, QQQM has lower expense ratio of 0.15% compared to QQQ, which has an expense ratio of 0.2%. Hence, for Nasdaq investing, both seem to be good investing options. You can download all this data along with the company links from the PDF in the pinned comments. The links in the PDF can help you for future reference also. Do check that out. Now that you know where to invest, you must be wondering how should you invest and which apps enable investing internationally. Also, if you're not sure about the tax collected at source compliances, then you cannot miss the upcoming videos in this series. If you don't want to miss out the future videos in this series, then do subscribe to the channel. Meanwhile, if you have any doubts on this video, do let me know in the comments box. Okay, quick recap. First, we will always research and go for passive ETFs, which simply replicate indices by actually buying stocks. We will avoid complex synthetic ETF structures. Second, we looked at the biggest ETF providers in the world: Vanguard, BlackRock, State Street, and Invesco. Third, we applied our checklist of index, high AUM, high trading volume, low expense ratio, and low impact cost to find the best ETFs for international investing. Based on our criteria, we shortlisted Vanguard's VOO and BlackRock's IVV for S&P 500 investing. And for Nasdaq 100, we shortlisted Invesco ETFs QQQ and QQQM. Okay, that brings us to the end. I hope this video helped you understand about US international ETFs in detail. If this video added value to you, then do hit like, share it with fellow investors, and subscribe to the Wealth Palette by CA Vamika so that all of us together can become empowered investors. Thank you for watching. See you in the next one.